In this video, we're going to talk about how to spot areas of accumulation using price action and volume. We're going to do this by looking at a recording of a trade that I took live this morning with my Discord group, and then going through a detailed breakdown of the logic and reasoning behind that trade. Let's dig right in. So a decent actual change of character now. Back into this overnight high volume area where we were accumulating earlier. So this is a good move. It's the most volume we've seen since the news. Again, still signs of accumulation down here. If we come back down and print a higher low, I would possibly consider a long. For accumulation, we're looking for a range where there's increases of volume at the lows of the range, and especially when there's quick probes of the lows that get swiftly rejected. In like Wyckoff would call that a spring. And so when you see those, like see here, swift rejection on increased volume, swift rejection on increased volume. So that's what's pointing me towards accumulation, and then also just the overall context of where it is happening. So this was an area of interest where there was support overnight. It was resistance here and then support, and then as we came into there, we were seeing those other signs. So that's what I mean when I say signs of accumulation. It's just the price action and the volume together. And again, we're still in this area where we've seen buyers come in. So see how this candle down had a lot of volume? And that volume essentially arrested the price action. The next candle was immediately pushing back up again. So that's what I mean. But see what's happening as we come down here? Another strong bullish candle. Now we've got these highs here. See the buyers coming back in, printing this higher low. And there we go. I'm going to try long.
Order filled.
Just take it back up to these highs. See how it goes. It's a little bit under 1.5 to 1, but I don't want to get it right up where these wicks are. I want to be a little bit more conservative with my target. It may come all the way up to this previous high here, this resistance, but we'll see. We'll see what happens. If we get a good move up, I'll tighten my risk to underneath this blue area. Come on, pump it back up. One more pump. One more pump.
Target
there
filled.
It is. Okay. All right, so now let's break down this trade. As always, we're going to look at multiple time frames so we can get a clear picture of the logic behind what was going on. So what we see here is that yesterday the market chopped around during the open and then broke out with a strong rally into the close, and the market continued to rally through the overnight session here. And we are opening up essentially at all-time highs, which is uncharted territory and can be a little bit scary for a lot of people. Now, given that we're opening up way up here and we closed way down here, this means that in the equity markets, if you're looking at ETFs, there's a gap. And so a lot of times we might expect the market to drop down at the open and fill this gap. However, with as strong as the market has been, we don't want to be too hasty about that because a gap and go is certainly possible. Now, in this case, what I had observed on this chart is we had this little swing high here that was then retested with a low here. And I drew this blue line across that area that provided me with some structure there. Now, this consolidation we're going to look at more clearly in a moment on a 5-minute chart. I did initially mark out the high of it, but I erased that line as the market opened up. It just became sort of not relevant anymore, and I wanted to clean up my chart. But what I really want to sort of keep in your mind is the fact that we are very extended. We had this consolidation with a resistance area and a tight little flag here that then was retested, and we're going to look at that now on a 5-minute chart. So here's our 5-minute chart, and essentially we're getting a closer look at that consolidation. You can see the swing high here that was then retested right here. I drew my line right at the bottom of that wick just to have as a reference point. Now, it was a little bit choppy in here, so I drew a volume profile over the consolidation area to get a clearer picture of what was going on. And I noted this prominent high volume node right here at 17,649.50. So I drew this green dotted line across that area to have that as well as a reference. Now, right up here is where the market opened, again, right at all-time highs. And you can see we sold off pretty abruptly down into this area. Up here, this created what would often be, considered a supply area. And then we sort of came up and tested that area once. So I've got this blue rectangle. You'll see that again on some smaller time frames, but that provided a reference point. This supply area up here was sort of a reference point as an upside initial target for any potential long trades. Not that they couldn't run further, but at least closing out parts of positions around that point or earlier. Now, notice here that also this high volume area sort of coincided with this basing area before this strong push up. So a lot of people, if you're looking at this on just the right time frame, you might see something here that looks like an order block or a demand area as well, just being confirmed by the volume profile, which is the main thing that we want to see here as our reference point for this green dotted line, because that's going to be relevant as we zoom in even further. So here's our 1-minute chart, and this is where things get really interesting, and we can start to see the footprints of accumulation taking place as we test into these lows. So again, here's the open. You can see we had this initial sell-off. This rectangle is the bottom of that 5-minute candle right before the open. That was already retested once here, essentially right at the open, and then an even stronger sell-off there. So that becomes our reference point as far as upside targets go, just to at least close out part, if not all, of our positions. I was only trading one contract, so I closed out the whole thing. Now, here's what's important. As we sold off, right as we hit into this green dotted line, remember that's the high volume node. Look at this surge in volume that came in. In fact, there's more volume on that candle than there was on the opening prints. That's really telling. And the volume stayed pretty high as the market came down right into that low and rejected one time. Now, I wasn't super eager to jump in long right then and there because this was a pretty clean little trend on the 1 minute of lower highs and lower lows. So the market then tested and probed a little bit lower. Notice again on these two volume bars, this little increase in volume as the market probed below that low and rejected. Now, right about here, this was 9:45, we had news. There was a PMI release. So I was sort of sitting on my hands. I was actually considering some trades at this point, but it was too close to news, so I sat on my hands. Right after that release, again, we shot down. Notice the volume surge on this bearish candle, but when you see that volume testing into an area of interest with this long lower wick, what is that telling me? That's telling me that every time the market comes into this area, there's a lot of buyers. That's why we're seeing this surge of volume. There is true demand there. That's why there's the volume, and the buyers are rapidly scooping this back up. That is our main clue that this area here is an area of accumulation. So the other thing too is this is VWAP down here. So in addition to this high volume node, in addition to this support level that we also have VWAP right here as well. And when you see all of those things with these indications on the price action and volume, think accumulation. So as the market sold off here, I was already thinking to myself, keep an eye on what happens when we come into this area. Again, you can see the wick as we hit into VWAP. You can see the volume surge again, and we're going to take a closer look at this again, zooming into the 15-second chart, which is actually where I took my execution. All right, guys, this is the 15-second chart. This is what I was looking at as I was preparing to take this trade. So again, you can see even closer here, you can see this rejection off of this high volume node. Look at the volume on that candle. Okay, that's really telling us when we look at those high volume nodes, those order blocks, however you want to look at it, you want confirmation that there is truly demand there. It's just a potential area of demand or a potential area of support. But when you see the market come into it and you see the volume increase along with a speedy rejection, that is telling us that there is true demand in that area. So you see it here, you see the volume stays high on this rejection here. You see again right here how the volume has this little peak as it pokes below that low and pops right back up. And then once again here, the volume surges higher than it has in the previous bars. The only higher volume was the last time it did that. Look what happens again as we come into this area. So we start to see volume on the drop candle, and we see the volume stay high as we're hitting into this area of the high volume node as we reject off VWAP. Now, due to the strength of this move, I was not going to just enter along on these rejection candles. I really made the decision that I wanted to see a higher low. And basically what we ended up getting was a beautiful inverse head and shoulders here. So we get this low, which is the left shoulder. Then we get the high, which becomes the left side of the neckline. We get the head, again, testing into this area of support, that previous support area from the overnight. Look what happens to the volume as we do that. We reject back up. And as we start to make these almost equal highs, I said if we get a higher low here, I'm going to take a buy as soon as we break above these highs, which is exactly what I did. Had a little bit of slippage on my entry, but that's exactly where my entry was. Now, 1.5 R is sort of my minimum threshold generally for whether I'll consider to take a trade. I want at least that much room for it to go. And this one certainly did before we got back up to this resistance area. However, given these wicks here, and then I was looking over here, this little kind of supply zone order block on this 15-second chart. So I moved my target a little bit, just 2 or 3 ticks inside of what would have been 1.5 reward to risk, because I wanted to get out before that little order block, and I wanted to get out sort of inside of these wicks. So I often will just use like the highest candle bodies as a reference point when I'm looking to take my targets before the actual swing high to get out. I also want to just note the high volume, or the strong delta rather, on the cumulative delta right on my entry candle, giving further confirmation to this trade. So the big things here are what led to this trade is not just this price action, this head and shoulders here, right? You'll see head and shoulders and inverse head and shoulders fail all the time. But we were already clued into the fact that the buyers were here. The buyers were here. They were accumulating positions. And when I saw how the volume increased as we started to hit back into this zone, that sort of put up the flag for me to be on the lookout for long trades. That's exactly what we did, and we executed. And of course, you saw the result in the recording. But here's the result as well. You can see price smashed right through my target. So, in hindsight, could I have gone for a larger target? Sure, I could have. Price did ultimately come down and wick below this low before eventually moving up to new all-time highs, and really just rallied throughout the rest of the day and never looked back. So a trailing stop probably would have gotten taken out under this low unless you gave it a little bit of extra room to breathe. But at most I would have squeezed out a few extra ticks if I went up to this resistance area. So I'm pretty happy with the way this trade was executed. We took virtually no heat on this entry, and you can see that at this point the buyers were ready to really pump this thing up. If you guys are ready to take a professional approach to developing yourself as a trader, Take a look at the link in the description of this video for our Discord room. We trade live, we do educational sessions, we do detailed trade breakdowns. We have a great group of traders in there that are committed, and we take this seriously, and we take really a no BS approach to developing ourselves as traders and just trying to get a little bit better every single day. Of course, if you appreciated this video, please hit the like button, please subscribe if you haven't already, and if you feel so compelled, leave a comment for me. Appreciate you guys, and we'll catch you in the next video.